Good morning, ladies and gentlemen. It's my pleasure to be speaking at the Finweek conference this year. It's actually third year in a row. My name is Gabriel Štefaňák, and I represent the company DECTA. I originally come from Slovakia, so born and raised here in Bratislava. But approximately 11 years ago, I made the best decision of my life. I moved to Riga, Latvia. And you may think, why the heck the best decision? Isn't it too cold and too dark in the winter? But in fact, the reason is quite simple and romantic. I met my beautiful wife in Riga. I have two beautiful daughters, and well, life has been great. Cannot complain. And I'm mentioning marriage because today I have a small giveaway at the end of this presentation. We are providing technology for issuers and acquirers, and I believe choosing a good technological stack for your fintech and payment institution, EMIs, it's almost like marriage. You have to choose wisely, and you have to choose good at the beginning, so you have a happy life. And I will share more details at the end of this short keynote. But today, the main topic is building a payment infrastructure, aka how to choose between custom-made or off-the-shelf white label, or whether to develop in-house. So I will try to talk about these three options to narrow it down. We will try to draw some conclusions at the end of this presentation. But most importantly, I will share a case study of the journey of DECTA, transforming from a payment institution or acquirer onto technology provider. I will show you real numbers, how the investments grew, how the cost grew, how the headcount grew, and you can, take your own conclusions out of that, which is the best approach. So this is how it goes down today. At the beginning, I will talk about some variables which affect the decisions of each, CTO, product owner, company owner, when thinking about building payment infrastructure. We will talk about the core business and how it affects your decision. We will talk about some challenges and pain points. Then very quickly about regulations and emerging trends, because this whole conference has been about regulation and emerging trends, so I will not spend too much time there. And then I will go over the case study, so kind of case study which closely maps the journey of DECTA, and then we will summarize it. I think without further ado, let's get into the topic. So I already mentioned that there are several variables which you have to take into account as a business owner or product owner when building payment infrastructure. Definitely the first one is the core business. So you need to understand what is your core business and how it affects the way you go about your payments business. Now, we usually work with banks, fintechs, EMIs, payment institutions at DECTA, and they very often choose to take off-the-shelf white label or custom-made solution. So they usually don't develop in-house because they understand the core business is elsewhere. However, I very often talk to sort of young entrepreneurs in business in payments who are new to the business, and they have built successful businesses outside of payments. And they very often bring this mindset to payments that they want to do everything themselves. They want to develop in-house, which very often results in delays in delivery and overspending, of course. And I think the biggest pain point or challenge there is to have sufficient or quality people on board. I think in general in payments or in business, quality people are scarce, and if they are there, they already are in their comfortable places in other payments companies, so it's hard to get them. So I think in general, the talent you gather is very, very crucial, and also one of the biggest challenges to go about it. So then, of course, you need to align your long-term strategy with the core business and consider what the talent you have on board, and if you can pull it off, sort of. Now, very quickly about the regulations and emerging trends. So these are very important variables which affect your decision as a product owner when building payment infrastructure. Obviously, if you do business in payments, there's a lot of regulation. And even the pure act of obtaining a license is a project in and of itself. So you're usually spending 6 to 12 months at least. It's very expensive, it's very lengthy. And once you have the license, the financial license, let it be payment institution or EMI or even other licenses. Then you, of course, have to think about PCI DSS. If you're talking about payment infrastructure, you have to think about GDPR. If you work with banks, you have to talk about and think about ISO, so ISO 2701, 901, AI Act, and so on. So there's quite many, and it's very heavy. And once you get them, you have to upkeep them as well. On the trend topic, well, there are quite many trends. I can mention, obviously, AI. There's been a lot of talk about AI agents. So you have AI on the front end, on the back end, helping with fraud, with orchestration, machine learning. In terms of other trends, perhaps crypto is no longer a trend. It's a mainstream as a currency, but also blockchain as a technology. So there are many solutions which are combining these two worlds, so traditional world of fiat and crypto. So as you can see, many factors to take into account. On top of that, local APMs when you are expanding to other markets and so on. So I'll try to demonstrate during the case study all of these little variables and how they affected our journey and how much we spent on developing the solution. So just to make sure that we understand, we are going to discuss between custom-made solution, off-the-shelf white label, and developing in-house. For the purpose of the case study, of course, we are talking about a case study which closely maps the journey of DECTA onto becoming a technology provider. But we, in the case study, are talking about a merchant coming out of Baltics, building payment infrastructure to accept euros, so the local currency in the Baltic markets. And I will go through the first 5 years, showing you how the headcount grew and how the also costs and expenditures into building grew. So in the first year, the main goal is to ensure the business can accept one-off and auto top-up card payments for the Baltic market. So the first challenge is obviously to integrate with the local acquirer. So we have a basic payment module, we have acquire X, and we are launching the business accepting euros. The annual cost is less than 100K. That's approximately 8,000 euros per month, brutto, of course. And we have one senior developer aboard. Now, the second year is becoming interesting. We are expanding to international markets. Let's imagine that we are going to Poland because we have Michał from BLIK, so it's going to be more interesting. So we need to obviously find a local acquirer, so we need payment acceptance in local currency. So we are finding acquire Y, which allows us to accept payments in Polish zloty. We know that in Poland there's a BLIK, and BLIK is a very popular payment method, so you have to have it. So we are integrating APM in the form of BLIK. In the slide we have PayPal, because I'm using this presentation in other purposes. And we of course want to have open banking, so direct debit. So we are integrating that and allowing our customers to use open banking, which results in developing different processing modules. So very quickly, the logic in returning authorizations in direct debit is completely different. So we are building different processing modules for each and every payment method. And the last challenge is actually unifying the customer experience, so the end user experience. So we are creating our own custom pay form. So there's this checkout page the customer sees when he's checking out from an e-commerce store, which of course results in a PCI compliancy. So we need to be PCI compliant. At the moment, just the self-assessment questionnaire. And our headcount grew significantly. We have added one more senior developer, 2 mid-level developers, QA engineer, and project manager, with annual cost of 372,000 euros. Everything has been going well. Now we are going overseas, so we are expanding to the US market with another set of challenges. There are 2 goals: reduce payment processing costs for the US market and reduce card payment friction for US customers, which means that we have to use bin service to identify the bins on the card of the user who is paying online, and based on that, create a routing module which routes the payment to appropriate acquirer or payment method. And of course, we know that not all the markets require SCA, so strong customer identification. So we are integrating a merchant plugin, and based on that, or thanks to that, we know when the 3DS has to be triggered and when not. So we have added 2 mid-level developers, compliance officer, and DevOps engineer, and we are over 500,000. We have 10 people working full-time. And going to the year number 4. And year number 4 is basically improving our payment infrastructure. So we decided that we are going to deal with fraud ourselves, and we are also going to be the owner of the card data. So we are going to create card tokenization, card vault. Let's see how it looked. The first challenge, it's related to card data and their migration. It's very expensive and difficult. That is why we are creating card vault. So we'll be the owners of the card data, which means that we need to be PCI compliant level 1 already. And the second challenge, well, we want to deal with fraud, so we are creating our fraud prevention and fraud detection module. It looked like this. We are at 12 people after year 4, and annual cost of 720K. So we added 1 senior developer to the team and 1 QA engineer. So I'm ending the case study with year 5, which is kind of the ultimate goal of payment platform. We are achieving full orchestration. So essentially creating orchestration platform, which means developing some machine learning or implementing some machine learning, so AI. So machine learning allows us to reroute transactions which failed, which pretty much allows full orchestration. So as you can see, we are adding machine learning to the routing module, which smartly decides which acquire will be used. Okay, so let's look at the annual costs of after the 5th year. We added 1 more mid-level developer and DevOps engineer. We are almost at 1 million, okay, just shy of 1,864K. Now look at the summary. This is the summary of 5 years of development of a payment infrastructure. Of course, we achieved the sort of ultimate goal of having an orchestration platform. But as you know, the work doesn't end here. You still need to spend the same amount of money for upkeeping the platform, for the PCI compliancy, for adding additional payment methods which will be popular. There are changes coming from the scheme, so you have to comply with those. But in short, in 5 years, we developed smart route and logic. We have adaptive 3DS. We have fraud prevention. We are PCI DSS compliant, and so on. So this is a journey of developing an in-house advanced platform which allows you to have full orchestration for multiple markets. Of course, you can decide which approach to take, whether to develop in-house and copy this model to be very unique, and if you want to do it yourself, you can take off-the-shelf white label solutions which have many of these modules available and even some PCI compliancy already in it. Or of course, you can also custom build with some third-party provider, which of course, in many cases, these solutions are kind of prefabricated. We can talk about the details, of course, during some break and maybe even during the panel. And now very quickly, what I mentioned about the marriage, I want to propose you a marriage with a tech processor. So for future issuers and acquirers, DECTA is a technological processor, both issuing and acquiring side. We are launching a program, or we have launched it this year. It's called DECTA Fintech Fast program. We got inspired by Visa. They have the same kind type of program for future issuers and acquirers. So in short, you can get incentives up to 100K for the implementation. Of course, there are some prerequisites. You need to be a licensed entity, or at least be in a process of obtaining the license. You need to think about or be a principal member of any of the schemes. And you need to be having an interesting business model to get selected. Each quarter, there's 1 acquirer and 1 issuer selected at the DECTA site. So you can either find more info on our website, scanning the QR code, or you can reach out to me pretty much anytime, because it seems like we'll be running the program for the next 6 to 12 months as well. I want to thank you for your attention for now. I'll be also sitting there for the panel discussion, but I'll be happy to catch up with the rest of you if you have some questions during some of the breaks. Thank you very much.
Okay, thank you, Gabriel. So Okay, can you hear me? Good. So this was the keynote before our panel, so thank you that you joined already. So let me introduce the rest of the panelists. So Rudolf Vido, from Head of Product of Vacuumlabs. Also Jiří Raška, CTO and co-founder of Partners Banka AS. Michał Szymanski, board member and director for new markets BLIK. And Michał Łukasik, CEO of Kontomatik, and Filip Marak, business development manager, CE Visa Slovakia. Okay, gentlemen, so we had a really interesting keynote before our discussion started. Today we will talk a little bit more about the innovation in the payment sector and open finance as a construct that all over the Europe is developing still and still. Before the PSD2 were applicable in the whole European Union, we heard that the open finance will change everything, that we will have access to our data, we will use our data for our purpose. We are after some period that this law already applies, and potentially maybe this is good starting point for the discussion about what will be next, what we see that will come from this, and whether the FIDA or the next regulations will change anything in the financial sector, in the payment sector as a whole. So the first question, because topic is broad, unfortunately. So and we have not enough time, unfortunately, for everything. So maybe let's start from the topic that was one of the first that we discussed previously. So the instant payments that we had that discussion. So Filip, maybe question to you, because you're one of the main actors of this discussion. How do you see that instant payments will work in the real life soon? Because right now we know about what you are doing in Visa, of course, and what you think will happen soon with instant payments.
So good morning / afternoon, everyone. When we talk about instant and payments, and I will take it more broad. Basically, that's what we do in terms of card payments, of course. But I believe when we talk about different payment rails, if you will, then I think we would see combination of different, basically payment types blending together. I can give you one example. We have our own way of sending money cross-border aside of the payment rails. And nowadays, when a regulated institution would like to use it, they would first need to fund us via SWIFT. So this, let's say, speed and predictability kind of loses its charm because you would need first to go through SWIFT, which takes some time. But we are, for example, now introducing a pilot where we will let clients fund us via USDC. So this is then instant, fast, and this is, I think, what I feel it's a future, really blending those different payment rails to the biggest effect for the consumer or businesses.
Okay, and because we are connecting to the previous panel that we discussed about the MiCA and the influence about the crypto sector for the financial sector, and from your perspective and from the perspective of the others, how do you think whether the instant payment will change the whole payment market, or the existing rails, the existing networks will exist still? What do you think?
Yeah, I think this will be an evolution, right? We will see which payment rails will be still in place, especially I think when we come to domestic payments or, for example, intra-Europe where we have SEPA, we are, I think, in very good shape in order to do account-to-account transfers or instant payments in general. But when you go outside of Europe or even try to send money from Poland to Czech Republic, which is not Euro, then you might be hitting problems. And this is, I think, where the next wave of innovation will come.
Okay, good. And because this discussion is focusing, is going to the BLIK, of course, because you know that the BLIK is one of the biggest market players of, for example, Polish e-commerce, and starting business activity in Slovakia, for example. Yes. So, Michał, from your perspective, how do you see the local market and this, let's say, tokenization that is existing and going from the payments, the existing payment routes to the, let's say, fast payments, instant payments, like we discussed minutes before?
Yeah, thank you. So starting from tokenization, BLIK actually was built around tokenization because our primary user experience with the 6-digit code, which is actually a token. So that was the very concept around which BLIK was built. But mentioning also the instant payments, they are for a while in the payment market. In my previous role at the Polish Clearing House, we were actually one of the first in Europe to implement instant payments in Polish zloty. And of course, the game is about the overlay over the instant payments, because if they could be initiated just from as a regular transfer from the mobile banking application or internet banking, that's not enough to build the scale. So, for example, BLIK is using instant payments in Poland and also in Slovakia for P2P transfers. And the interesting fact is that around 80% of all instant payments in Poland are initiated by this BLIK interface. For the other use cases, including e-commerce, P2P, ATM, we have our own settlements. So I very much agree that there are different models, and it doesn't look like instant payments will just dominate all payment spheres. And I fully agree that interoperability is definitely something which is missing. And my personal experience with Asian markets is that they are much more advanced in different kinds of interoperability. So in Europe, we are basically discussing things about making interoperability between instant payment systems in different currencies, for example. And that's actually a reality in the Gulf countries or in Asia. The same is for QR code payments in different countries. So I think there is a lot of work in Europe toward this.
So in Europe we have unified legislation and let's say application for the license, but Asians have the system that work actually very convenient for every countries.
Yes, they are much more advanced in interoperability of instant payment system in different currencies, and also of local card schemes and local mobile payment systems. So definitely we see a lot of development in the European market currently happening, but definitely the Asia is more advanced in that area.
Okay. Gabriel?
I think I just wanted to add quickly from kind of the user perspective that sometimes there are these attempts to bring something new to the market, but if you look at, for example, the example of Revolut, which is kind of the ultimate challenger bank out there nowadays, I mean, they've been providing instant payments, I don't know, for 5, maybe more years, and I think they're using Visa Direct or MasterCard Send Rails. You just find some nickname of someone, and that's pretty much an instant payment. So the same you have with stablecoins, they provide instant payments. So at the end of the day, it comes to the kind of convenience for the end user, for them to actually make it work and use it. So it's sort of combining the availability and possibilities that the legislation allows you, plus some infrastructure on the back end, which the end user doesn't even see. It has to be smartly created and know which API call should be triggered for the end user to have seamless experience. But this instant payment, I think it's been here for a while with different shape and form, and I think if it's not convenient for the end user to use it, they will just not use it.
So we jumped a little bit from this, let's say, instant payments to maybe the second topic that we had on the agenda, to embedded finance, because as you told that customers right now in Europe expecting that, okay, I will pay, but I don't want to be involved. Let's make it somewhere on the back end. Yes, so this is the trend that everybody sees. For example, in the e-commerce, I want to have some goods, but I don't want to see the payment that I have to, I don't know, click the digits from the payment from the card and accept anything. And question to you, Gabriel, because this is, let's say, question to you a little bit. How do you see that this will develop this, and do you see any potential, let's say, schemes that are already or patterns that are used for example, for that embedded finance payments?
Well, I think there are several, I guess, industries or parts of the fintech where this could be applied. Mm-hmm. What comes to my mind is it's of course AI agents and the payments which are being triggered literally embedded. The AI agent will be able to read your card data that you saved in some other service, and they have access to that. Although I think for that we need to create some kind of regulatory infrastructure, so it's possible. But what came to my mind is actually biometric payments. I think it's that is an interesting area, which is also allowing interesting things in terms of payment side. So I had a call, I think this or last week, with one bank in the Philippines, and I think they are second or third biggest, and they are sourcing their payment infrastructure. So we discussed that, and after they finished roasting me, I started asking some questions about what's popular in the local market, some APMs, for example, or any other things that we have to have in order to sort of qualify. And well, they told me that it's very much a cash economy in the Philippines. Yes. Although, if you go to Manila, it looks like Manhattan. It's amazing. But he told me it's pretty much cash economy, but we have biometric ATMs. So their bank have ATMs which allow the customer to withdraw cash just by scanning the face, which I was thinking that's, well, I don't even know how it's possible that you have such an undeveloped part of the country on the infrastructure and regulation side, but then they allow biometric payments. So I think this could be kind of breakthrough also in the embedded finance field. And also another thing is separate from that, but these biometric payments in terms of scanning a palm or anything else. There are many startups in Europe which are raising quite a lot of funds and are trying to qualify and be the first one who will also provide that. But as we know, in Europe, because of the regulation, it may take a while.
Just to comment on that, we actually in Vacuumlabs we are building a bank in Philippines, so we saw firsthand the complexity that low regulation can also bring. So, for example, when we were doing onboarding flow, they have 16 different IDs. You can have some fisherman license that you can use as your ID, right? So we had to implement 16 different IDs, and then on the side of payments, what they have is they have payment aggregators that are aggregating different payment rails together, and you are connecting to this payment aggregator usually. And what is interesting is that, for example, if you want to pay your bills, a lot of people go to their utility provider and they fill some forms, and this is the way how they pay their bills. So yeah, on the one spectrum you have the QR payments which are working there. Mm-hmm. And on the other end, you have still these forms and these prehistoric rails that are also existing at the same time, due to also maybe low regulation, because you can do whatever you want there, but it has its own cost. And the second topic I wanted to just follow up on too is the embedded finance, what is happening now in the buy now pay later world, right? Mm-hmm. The apps were firstly like customer interface that was being used. And now what Apple did, they wanted to do their own Apple Pay Later, right? And they failed. And now they are implementing Affirm and Klarna into that. So the checkout experience will be actually a marketplace for different buy now pay later and different rails. And it seems that people are using more and more the wallets, like Google Pay, Apple Pay, also maybe BLIK, right? And this could be the places where you could like integrate different rails and the means how to pay.
Yeah, especially that the BNPL from starting maybe 5 years ago, the trend as a whole really boosts up in the United Kingdom, for example, in the Germany. You can imagine that over 20% people that are buying in the online in Germany are using BNPL, for example. In Poland, I saw that it's not so popular. It's the numbers are growing still, but it's not so popular like for example in the UK, where even the FCA told that we identified a potential risk that it's very convenient, but people are not understanding that they are taking the loan at the end of the day. So convenience is one thing that you mentioned, that we are paying, we are having the goods that we want to have in a seconds, or maybe in a days if it needs to be shipped, but it also creates the risk. And the question is whether we really know that the people have the funds to pay back the money. And this is the question to Michał, because Michał is developing the software. He's managing the company that is known from the analyzing data and giving the information to the, for example, loan issuers to how looks our financial standing. And question to you: Do you think that the BNPL have the potential, and what are the risks, for example, from your perspective, that you identify having the knowledge about the customers, this really vast amount of information?
Thank you, Janek, for the question. Good afternoon, everyone. So there was actually quite a few questions. Within one question. So just to give you a broad overview, so we are the open banking aggregator, Kontomatik, and we're a major player on the Polish market, actually processing 1 million of different lending requests every month, and we are cooperating also with the main buy now, pay later providers. And actually, in Poland, I don't know what's the specific of the other markets. I could say it's fairly specific because we are having one largest company, which is Allegro Pay, which is the sort of payment institution that is subsidy of the largest e-commerce marketplace. So, and I believe, I don't know statistics, Janek, but I believe 80% of all buy now, pay later, there are billions of Polish zloty every quarter, are just actually produced by them. And there is different perspective of marketplace and their strategy and independent buy now, pay later provider. Because if you look, you mentioned debt and the risk that the people would take loans and have liabilities.
Would be over debt.
That sort of they are not able to cover and pay back. If you look at the average transaction in buy now, pay later in the Polish market, it's roughly 40 euros. And of course, if you are like a lending product provider, you would like to give as big loan as you can reasonably, taking into account your underwriting process and risk assessment, and you'd like to have a big portfolio. But that's like a typical buy now, pay later institution, like a lending institution perspective. But if you are a marketplace, you don't necessarily want that to happen. From marketplace perspective, you don't perceive, I believe, the buy now, pay later like a lending product. It's something very, very attractive in a sense of financial gain that you are getting from this, very product. If you think about it, the
I would say, commission rates on large marketplaces in Poland would be from 4 to 17%, depending on the goods that are being sold. So for marketplace, the strategy when it comes to buy now, pay later is that they rather want the customer to stay as long with them as possible, build a habit of paying using deferred payments for purchase, and keep the customer for at least 5 years. Then they are not really earning on interest, or they can eventually even offer the loans on which they are losing effectively as a financial product, but they are earning on increase of average order value and effectively the higher commission, and they are earning it right away. So I'd say there is a great perspective, and I see that the big marketplaces and the big players, they would like to actually have their own payment products like Allegro did. But it's not necessarily because they want this as a main product line, but they want this product actually to drive their strategy for the whole marketplace.
So maybe Filip, okay, question to you, because we are discussing, and from what Michał just mentioned, we can easily see that people are not necessarily treating the BNPL as a product for just taking the loan. Maybe it's rather the payment, new payment mean for everything. How, from your perspective, from Visa perspective, it should be treated?
Yeah, I think you had a good point there in terms of basically increase the shopping basket, and I think this is even more relevant in terms of the business lending, which we are seeing. There are companies that are focusing on e-commerce specifically, where they are basically connected to the payment gateway, doing the risk scoring of the e-shop and saying basically, I'm providing you working capital and you are repaying from your turnover on the payment gateway. If you sell a lot, you are repaying faster. If you sell less, then you are repaying slower. And this is exactly the kind of product that, especially in business world, helps a lot, because they can buy more stuff that they can sell. And for example, we are also seeing this in, let's say, in person, where we just launched cooperation with one such lender and a hobby market called Hornbach. And they basically built a new digital lending solution, which allows them to take a credit line. And basically, they can take more jobs, for example, construction workers, because they have working capital to work. And basically, for them, it makes perfect sense. So I think it's important to think of, let's say, both retail market and business market, but we see it as basically an important step of evolution. And basically, in both cases, at the end, like if we are looking where Visa is, when we talk about that payment, like percentage of those payments over the e-commerce will go anyway through cards. So we are basically there as sort of data feed that helps also to do this lending possible. And in case of this Hornbach example, for example, they are providing the possibility when you are repaying the loan to do it also via payment card, because the experience is fully digital, so you can just do it within the platform. So we see it as a great enhancement of basically the flow, and then the payment part is sort of staying in the background, but of course important as well.
Just a side comment. Yeah.
Okay.
Sorry, like a quick comment. I fully agree. And if you look at what is happening now around the marketplaces and buy now, pay later, like we are getting a lot of requests like to support businesses with risk assessment. But if we would look at them right now, there's not that much of a consumer products. There's business financing everywhere, and there's like everyone wants to do like turnover-based financing, merchant cash advances, and products like that. And like even the example of Allegro, okay, what is visible that we are actually helping people to go through to get their acceptance for higher buy now pay later limit. But somewhere in the background, we are doing the same thing for all the business business purchases on Allegro. That's one thing, but also the same for the merchant financing. So basically, it's a great market, and it's growing from every single perspective, and the customer is just a part of it.
So if I may add two things. First is that because in Poland we also introduced the BNPL service, BLIK płacę później. So first thing is that we see a lot of interest from the bank side because banks simply want to be in the game, and there are a lot of already mentioned non-bank providers doing that. So that's this kind of a competition, and the willingness to keep the position of the banks because that's their core business, and that's where we find the rationale for our service. But the second small thing is that there are different reasons for customers using this BNPL, and one is, for example, not actually related to loans, so especially in fashion industry. People tend to buy much more things that they actually need to just choose one, to order 10 pairs of shoes and choose one and send back 9 of them, and BNPL is nice for them not to actually frozen
not
the
using
capital.
your capital for that.
Exactly.
Yeah, but if you end up with 2 out of 10, not the one you would normally buy, then
Still good.
Everyone is happy, especially marketplace.
Exactly, and from the perspective of the bank, because we are talking still about whether it's loan, whether it's payment mean. From your perspective, how it should be treated, whether the client should have more knowledge to use it, or maybe it should be treated like the credit card, for example.
It's still credit, it's still loan, and it's smart way how to sell it in Germany at the beginning, because all the Germany hates the loan products. When you rename it to buy now, pay later, you are able to sell it in Germany, and that's the reason why it comes live in Germany, and it can be used or reused everywhere around the world. So yeah, it's the new nice way how to sell a loan product.
Okay, and do you think, because right now the credit consumer regulation is new, and before it was implemented on the EU level, between the countries it was discussion, okay, it's loan or not, because nobody knew when it started the loan, where is just only the payment. And from your perspective, because Michał, you are one of the suppliers, for example, for that market, you think that this regulation will change anything from the perspective of the suppliers of the BNPL?
Well, I frankly don't know, because there was actually there is a CCD directive, of course, there is a framework, but then it's all down to the local implementation. You know how the local states will local implement law to their legal order. So I don't know. It's very much dependent on affordability checks and where the threshold will be set or not. We operate on 8 markets, and every market at the moment there are different sort of different discussions, or like in Spain there are basically no discussions. There were consultations last year, and no one knows what will be happening. It will be massively delayed. In Poland, it will probably not impact buy now pay later to this very big extent, because the average threshold for this more sophisticated income checks would be set around one minimal wage in Poland, which is 1,000 euros. So effectively, it's way above any average purchase. So that will it will be important for all loans that are given to small businesses, also or sole entrepreneurs, but not necessarily to BNPL. So yeah, maybe additional reporting requirements, bit of overheads here and there, but nothing very significant in terms of variable operational cost.
Yeah, and because we are talking about the BNPL, so kind of financing, and guys, open question, because we see in the Europe multiple new ways of, for example, microcredits, crediting of the market. Not only consumers, because this is the obvious for you, but also the broader, meaning also the companies, for example. And do you identify any new models that are on the market that are good to look a little bit closer? Filip?
Yeah, and probably thinking like 2 way ahead. Like one thing I'm hearing, especially from crypto fintechs nowadays, is like they are interested in providing credit based on the collateral that is in Bitcoin or Ethereum, for example, because those are effectively locked there, and also people don't want to sell them because of the tax reason often. So this is, I think, one avenue that might be more and more important. I think we are still a long way before this will be standard part of savings, or for example, companies actually putting this on the balance sheet in large. But I think this is one of the things that we should be aware of, and this is something definitely that I see as one of the potential innovations.
Actually, I will quickly mention a couple of them that I came across recently. There's one startup in Hungary, actually, that I talked to, and they are providing BNPL, but they have a license in Hungary, and I believe on top of like a standard white-label BNPL solution, they also have factoring included, so they can also finance. And the second example, I already mentioned there are quite many neobanks licensed in the UK and in the Baltics, where I come from. Well, I come from Slovakia, but I live there. So there are many of these neobanks, and it's very hard to differentiate between one another. So they just open accounts and cards. However, I spoke to one recently, which is in fact our client for the issuing, and they are coming from the industry of app development on Apple Pay, which is kind of their specialty. They understand the Apple Pay market, or how do you call it, like the Apple Store market. So they are providing, and the way it works is that if you are a developer and you release an app on Apple Store, you only get paid in 3 months. So that's the contract, so you don't get paid instantly. So they do a small innovation that they understand the market, and they also do factoring and provide financing for these companies who bank with them and are developers on Apple Store. And this is kind of new line of business they developed because they understand it. So sometimes the innovations actually come from places where you don't expect them, and it can be actually a very good stream of income for a company in fintech.
Yes. Okay.
In Poland, we see that more of a demand for the turnover-based financing in like this sort of range of 10k euros to up to 50, and there is like a sort of a lot of companies that are focusing on that, either in the factoring form or MCA or something similar turnover-based.
Okay, so financing for the SMEs potentially. We are saying in the e-commerce and traditional, let's say, direction. And you, Filip, told also about that crypto market, something what previously was not even in the scope of, let's say, lending, is coming to be something potentially relevant for the people. And in Visa, maybe you can share with us what's your position about this, because this is not traditional financing. It's something interesting from the perspective of mixing this real world with the crypto. So it's becoming something one. So how do you treat it? What's your approach for that? And maybe we'll see something interesting soon.
Yeah, I think in terms of crypto, like if you look at Visa, we are a payments company. So we are payment rails. And at the end, if you settle through us USD or USDC, it doesn't matter much. So the way how we are looking at it is where we can actually add value. And there are, I would say, 3 main areas. First one is when you actually need to load money to a wallet, where basically you can do it from an existing card. Everyone who has Revolut actually knows this experience very well, I guess, basically just using Apple Pay or Google Pay. And then the second is how you actually want to spend the money that you have in that wallet in any way. So you can either, again, send it to your card that you have, or you can just have a card issued and just basically have the conversion of, for example, the crypto right away at the time of purchase. So it is about finding how we can help connect that, let's say, world of traditional payments with this new world of crypto. And we are seeing then also those use cases with settlement and stuff. So I think it will be just coming more and more.
Okay, and because credit is always connected with the credit standing that you have, and question, Michał, to you again. Sorry for that. Do you see the potential that it will help, for example, that we are going for example, to have more data about the client soon, because we have from the PSD2, for example, soon maybe we will have FIDA in place. That you think, from your perspective, you think that it will help, for example, to make this credit scoring better, or we have so much data already that it will change nothing? And how do you think it?
Well, if FIDA goes live, it will change a lot in many, actually in very many places, and the new tools could potentially be created, and there might be a sort of a bit of a really shakedown for the insurance market. But in terms of like credit risk itself, especially both for consumers and for businesses, I wouldn't expect that much change in terms of just the strength of the models. So if you combine like open banking information, which is basically pay information from payment accounts, and for see the sources of income, costs, risk factors, you can track all that internal transactions that are linked to this account. There is a lot that you can already extract from it, and if you combine it with the credit bureau data for individuals or for companies, and then if for companies you add other information from public registries or like like in Poland from tax files or from e-invoices registers that are coming live next year, then you already have like a pretty strong source of information, right? It's just always a matter of cost to risk. You need to weigh it and put the process in a way it's efficient. But FIDA may change a lot, but I wouldn't expect that it will dramatically change like the credit risk assessment process.
So for the smaller lenders, it will change nothing potentially.
I don't think it will change much. The tools that are here right now are like fairly efficient, good, and like you see the markets. If you look at Poland, or even Spain, the market is growing year by year. The portfolio qualities, both like consumers and business, are improving. Actually, in Poland, the consumer lending like portfolios that are being sold on the market, a few years back, they were sold at like 40%, 30% of nominal value. Right now, they're 60%. So it just shows, how the risk assessment process in generally improved. And most of the companies right now, like for the consumer products, they are using open banking solutions, and it's working very well.
Okay. Jiří?
Actually, there is one more thing to mention, that e-wallet is coming, and that's gonna change the market in Europe. KYC will be same through the Europe. E-wallet can handle also instant payments, so that will be changed more than PSD2. That's actually running, and we are using that. But e-wallet will change the market.
Yeah, and it's already quite well developed, so we can expect that soon we will have structured data and easy exchange of personal data that will help to assess it. Yeah, Rudolf.
Maybe what is interesting connection is how there is this war for the customer, like who will own the customer in the end, right? And what the traditional banks are seeing is how Revolut is stealing their customers. So they are trying to copy a little bit Revolut. But what is Revolut doing? Revolut is seeing Klarna, so it tries to copy Klarna and be more like a lifestyle application, right? And then what is Klarna doing? Klarna is maybe becoming just one of the checkout options in Apple Pay and Google Pay, right? So maybe the e-wallets could be the future potentially, but who knows, right?
So the e-wallets maybe the next stage of the development of.
Could be, yeah.
Okay, and do you see that see as a potential that new market players will be created, or just the existing banks, or the new banks like Revolut will take the whole market?
I think the opportunity for new market entrants is that they can start from the first principles. They don't have to provide everything. They don't have to have loans, and they can do just one thing really well, and the customers might like that, right? So it's always the question between providing everything and being specialist in one thing. So there will be, I think, this tension, and like who knows where it leads.
So they will be good in the technology, like Apple, for example. They will be convenient, and customers will flow to use them.
Could be for a time, and then maybe there will be the new change on the market. So, right? So
yeah, of course, and of course that's of course very interesting topic. Whether this will develop, because that means that you will possess your data and could use your data, because right now it's a little bit problem to get your data from the bank, from the investment company to use for your own purpose. And the idea of Vido is to give you ability to use your data for your own purpose, for example, for the credit scoring or insurance purposes. And from your Gabriel perspective, you see any, for example, need in the sector that maybe clients are asking for the solutions that could be white labeled for them, from the perspective of, for example, the wallets, for example, from the perspective of BNPL or similar?
So for us as a tech provider, I think the main goal is to provide simple infrastructure, ideally white label with some customization, so there's some differentiation, and then based on what the customer needs, the customer's PSP or payment institution, EMI, etc., provide as many payment options as possible depending on the market where the end user is. And if they're of course operating globally, then you want to have as many integrations as possible, as long as it's within your budget. So I think, to answer your question, if there's going to be demand for this, at least at the moment, we do not see that, but it may change. All these things change quite quickly. Then for sure we will consider that, and it's going to be part of the solution that we offer. But honestly, at the moment, I don't see that, and not all the trends are here to stay. So,
of course,
who knows?
Of course. So who knows? Okay. And question in the topic, because we talk a little bit more about the BNPL. We spoke a lot about the open banking and something in the middle. What's in the middle, and you think that in the near future there will be potential for the monetization of the API of the PSD and the data from this market? How do you see the potential from this sector? Because financial data are always the key for every business. They are good, they are reliable about the client, and you think that soon we will be able to build new models on that data? Michał?
Well, yeah. Of course, I can elaborate, because we are aggregating data from PSD2 APIs, and then we are analyzing them. First we are aggregating them, then we are cleaning, standardizing, enriching, and then we are analyzing. So basically, this first layer, which is data acquisition, so sort of this purely infrastructural, it's obviously the lowest margin, and there is not much of a business to be done here. But then, of course, analysis, the most sophisticated are the things that they are doing with the data. Then you can resell it with the more reasonable margin. So of course, there is a market, and there will be.
Okay, and Jiří, question to you, because Michał says that there will be market, and from the perspective of the bank, do you think that it is something interesting? Do you see the impact of PSD and this data on the banking day-by-day activities?
For the credit purposes, we are using that same like all of us, but we cannot sell it like a bank. So there is no place for monetization, but for the consumption. So
I have one interesting remark, because always we had these discussions, and there is always this comment was sort of from the bank side, that we need to give you data. It's for free. We need to expose our data for APIs, and we have nothing, right? So why would we really even bother to do it in a good quality, whatever? Well, we have to, because it's regulated and we have to. But we did an exercise 2 years back or 3 years back, because one of the major banks in Poland is not giving the customer, account holders, credentials through API. So, well, it kind of cripples your product. It's difficult to sell the data if you don't know whose data is that. So we walked around the banks in Warsaw. We actually approached top 10 banks, give or take. And we asked, okay, well, we are okay to pay for the data. Just give us more like a slightly bigger range of data, and we'd be very happy to share our margins with you. And, you were always asking, well, you were always like claiming that would be fair, that we share the margins, and, there is like sort of reciprocity. And eventually we couldn't agree on anything. Like, every bank looked at us and like, okay, well, you're working with Revolut, so, they're stealing our clients. Okay, so we'll not give you the data. Others, you're working with lending companies now, we are not interested in cooperation. And at the end, what seemed to be like a reasonable sort of market fit for both sides, it appeared to be not feasible. So I wouldn't say that, fintechs are too much responsible for that, maybe regulator.
Yeah, I can agree. But for the daily purposes, the PSD2 is the failure because banks are protective. We are protective. We wouldn't like to share our data to others. But hopefully PSD3 will change that for daily usage, and the e-wallet also, because you can add your banking account there. So that will be the way. And from my perspective, it's nice to open all the data to the customer, and he decides where he will move with his data. And what we are building is like called financial marketplace, and we are open to integrate all the data from other banks, not just from the banks, but from the insurance companies and others, to be able to sell their products in one app and do the analysis upon all the data in one platform.
Okay. Michał?
Just a super short, very last comment. It's very true what you're saying. And it's like for if FIDA is successful or not, it depends on actually if customers have an access to data. Because if customers have an access to data, and even if APIs are not fully standardized, like it's not, it doesn't work like exactly the same in every country, the market will find its way. So as long as there's data available through an interface and customer can access it, then sort of open banking or open finance companies will be able to access this data one way or the other and work on it and build better products.
Okay, that's good because right now we are just exchanging the data about the payments, about the let's say payment history from the 90 days. Let's call it that way. How much? 180. Okay, sorry. 180. And the question
sometimes depends on the bank.
Yeah, depends on the bank. And the question to you, because we will exchange right now also the data with the, for example, payment, not only payment institution, but as well with investment fund, with funds, with for example. Investment companies with crypto services providers. So from the perspective of the bank, do you usually think that it will be helpful, for example, to have new business model, new services for them, and maybe offer new services that previously were not even in the scope of interest of the bank? How do you think it will soon look like?
Yeah, absolutely. We are living in real time, and we would like to have everything instantly. The data should be open, and the customer should decide who can work with his data. So yeah, and the models and the opportunities are always behind that. And that's the place for all the fintechs and the startups to find out where is the opportunity and do monetization upon that.
Okay. And Filip, question to you, because from your perspective, because you're maybe tech supplier, maybe part of the market, it's always problem how to treat the Visa, MasterCard, or BLIK, because in part you are the market player, you're making the market. And from your perspective, do you see how this, for example, card networks and open banking complement each other, and how to deliver new services? Do you think that they are comparable, or something is better?
Yeah, I think it's again about finding synergies, how one can help another. And I'm just thinking, I think it was Adyen or maybe some other payment provider, basically in their onboarding flow of a new merchant, instead of basically you typing the bank account number and trying to somehow verify this in different means, they basically introduced that basically you could just connect to the bank via strong customer authentication, and by that you basically verify that this is really the company account. So basically this improves customer experience and reduces potential fraud that someone actually tries to put there someone else's. So I think this is really about finding the ways how like one thing can complement another. Another thing, for example, is that like Visa several years ago acquired Think, and one of the reasons was basically the ability to crunch the data and bring something meaningful out of the data. And we've introduced a product that basically helps with understanding what the transaction is about, what is the merchant, what are the merchant details, and so on. And the way how we are looking at this is that we have, of course, the data from the issuer, but also we have the data from card network, we have some external data, and so on. So we are trying to combine all that together, so we are bringing really the value there. And it's not just about the payment, but then, for example, what the bank is looking at, how I can drive down calls on the customer care, because the cardholder will know, okay, this was this shop, and not just some random name I don't understand, and I'm calling because I think there is a fraud. So I think the business case can be found in many areas, and it's really just about how you combine all these data sets together.
So what you mentioned is very important in the aspect of the new technologies and the new services. So the frauds and fighting with the frauds. So this data could be used not only for making the new products, but for good purpose also from everybody's perspective. So from the perspective of fraud fighting with.
Yeah, absolutely. And what we are doing, like we have very long history with our AI model. I think we started to use AI in our risk engine in early 90s, and we are. This is basically what where our trust is based, right? Because everyone sees Visa as reliable and secure. So we are investing a lot into our risk engines. And we've run recently a pilot in the UK where we actually were able to improve on account to account, on faster payments, basically like capturing fraud or like detecting fraud, to be precise. So we basically now are offering this as a solution, which is not related to card payments, but basically learned from the card world and improving on this to basically bring the same security also on account to account payments. So it's really about complementing and finding synergies.
Okay, and Michał, question to you, Michał Szymanski, that time, because BLIK, because we are talking about the security and about the patterns that we are seeing in the transactions. So BLIK in Poland is seen as a very secure mean of payment, or especially in the e-commerce, and potentially you do the same. So you're analyzing multiple of data, you're fighting to make the BLIK secure as it possible, and you think that you need more data, you need more cooperation maybe for that. How you see the opportunities, the problems with security for example in the other markets or maybe in a whole EU?
Yeah, a very good question. So from the very beginning, we are very minimalistic regarding the data we have. So actually, we don't process the personal customer data. Those are just numbers, and customers are the bank customers. So we fully cooperate with banks, and we have our anti-fraud engines. We are secure firstly because each transaction should be approved in the mobile banking application. So there are no exceptions with that. But we see the growing social fraud risk, and here those engines are more and more important. But we don't plan to gather more data just for that reason. The reason we are planning actually to process more data is more about interoperability with other P2P schemes like the Spanish, Portugal, or Italian. That's the Europa initiative, because In those systems, the standard is that before sending a transfer, you can actually see the name or part of the name of the recipient. So to be able to deliver such a service, we should start to collect the names of the account holders, but not for security reasons.
Not for the security reasons. Okay, so you see that it's a little bit different how we all treat the security, because BLIK is the payment scheme that issuer and receiver is the bank at the end of the day that is participating in the scheme. So it's a little bit different level of security that we can talk about than it's done in the card sector, for example, where the issuers are much more and much higher numbers, and frauds are different schemes. And from the perspective of because I know that Visa is using the AI, for example, for fraud detection. You think that it's useful tool or not? Because the first wave of how the AI was implemented, everybody told AI will change everything. We are so good with the AI that we won't need the experienced people on the positions. You think after this, let's say 2 years, that this is still the case, or we are coming back to the situation where these tools are just only helping us with the crime fighting, or what's your thoughts?
Yeah, I think in terms of the risk, that's basically what I said, and I think it is here to stay. Like machine learning models and AI is important factor, and not just in risk, as you basically had in your keynote, having, for example, payment orchestration. That's just very, very important. But I think like the frontier that we see is the basically agentic commerce, right? How the agents will be shopping. And I remember I was reading an experience of one US journalist, because things like Perplexity or like different systems can already shop there on your behalf. And so he wanted to order X, and he actually received X, but the dozen of X costed him like $30, because the X itself costed like $4, but then there was like priority fee, shipping fee, some expedite packing fee, and so on. So and that's the thing that the agents are not realizing nowadays. So it wasn't actually a fraud, but basically just poor user experience. So I think it's about all the market participants, how basically to help this new wave of economy, which is coming, to basically put it into shape so the customer can put trust in that, and the merchants and the banks are basically happy with the data they are getting, and they are able to risk the transaction and say approve or decline.
Actually, from my perspective, is the question of what's the AI. The machine learning, totally agree, that was with us, and it will be used in models. We are somewhere before AI Act comes, so maybe something will be forbidden for us. And from PSD3 perspective, as we are doing currently, the human behavior analysis, we have to be protective for him to be sure that who is paying whose bills. And when I will use agent for the payment purposes for my app, it's not having my behaviors. So in that way, from PSD3, we have to deny it. So that will be question mark at the end of that work.
Okay, because everybody is saying about the instant payment, that money have to flow instantly, that we are expecting that nobody will wait for the money if we will pay. And on the other hand, we are seeing that, okay, this creates also the new risk that, for example, the new frauds, new patterns. And from many perspectives, we are banned, for example, from processing the data. From example, from the perspective of GDPR, from the perspective of AML, even we are banned to process some sorts of data. And you think that the numbers or the frauds will rise after the PSD2 potentially, or will be the same, but we'll just only see the new models that will be implemented. Maybe AI will be used for example, to create more reliable histories for example, for the people? What you think?
It's growing all the time. The risks are new scenarios that will definitely grow at the end.
I think that's the constant battle between the fraudsters using new models and new technologies, and those who are trying to protect the customer. And I agree that regarding AI, in payments, there are actually two areas. One is using machine learning and AI for fraud prevention, which is proved great, etc. Second is this agentic payments. We are working on them. We have a project. Personally, that's my personal opinion. I am a little bit skeptical because, first of all, I think that we are in quite early stage of those large language models and using AI for our personal purposes. I do that every day, but I think that we now assume that it is neutral and working only for our benefit, and the experience shows that it will be like with browsers actually. And I already saw the possibility of spending your marketing budget to inform the AI better about your products and how good they are. So firstly, I'm not sure if AI will really give me the best product for me, or it will also take into consideration the provision for the owner of the AI. And the second thing is that actually the finalizing the purchase, I think it's really very short now. So if I'd like to find a new bicycle, yes, I can spend weeks and AI can bring me more benefit, a lot of benefit, because they will shorten the list, etc., etc. But when I decide that, oh, that's the washing machine in that shop I'd like to pay, how long it will take me? 1 minute?
Exactly.
So
exactly.
In of course in trading and some specific areas that will be invaluable, but for a regular household it is, I think, a little bit like this fridge which is ordering food by itself. So we are talking about that for decades already, and it is not materializing
it's still not
yet.
the real life, just only the advertisement. Yeah, Rudolf?
Maybe just to add to this, what is interesting about AI is how it can become an echo chamber. So if you don't really prompt it that, be hypercritical, be cynical to me or something like that, it just kind of repeats like what you put in, and it starts as a dialogue, but it resembles a monologue at certain point when you are communicating with it. So I think it's really important to have the right seed prompt with which you prime it to think either contrarian or similar to you. And yeah, I had also recent experience when I was trying to buy new headphones, and like I wasn't getting the right recommendation. I had to go the old way and see like what are the best performing headphones on the market, what is being shopped most, and so on, right? So I had to go different route.
So despite that the AI was developed for a few years already, and LLMs are quite accessible for everybody, still a real person can do better the advertisement for example of the services that you mentioned, that you put trash information, you get trash at the end of the day. So yeah, that's true, and we see that all over the for example news portals where AI is used, for example, to create the content. Yes, so if they have poor data, they have not good quality also at the outcome. So definitely this is the problem, and we'll see whether it will be easy to have understanding of this data, of these outcomes. And
I think this was a good point about the data, because I saw somewhere, I'm not sure if it's true, but it was showing that like the sources of data for LLMs, and it was saying something like 30 or 40% from Reddit, right? And I'm like, okay, maybe not the best source, to give you advice.
Yeah, and the problem with the copyrights potentially, if they are using the data from the sources like the books, like the something what was created by humans. So this is the problem that. But in the United States, they told that for them it's not a problem. It's acceptable cost of the development of AI. We will see what will happen in the EU with that definitely. And guys, the last question, because our time flies, unfortunately. And we had one interesting, at least for me, topic, because at the beginning we spoke a little bit about the instant payments. It's good, everybody is focusing on that. And not so many people are focusing on one thing that arose two years ago. So about the MiCA. So we have EMTs, for example, that are fast, that are convenient, that they don't need to use the existing payment rails. They can be somewhere on the back. The client will not see that technology, but will use it. Do you think that application of the, for example, stable coins, so the EMTs from under the MiCA, will potentially somehow kill the instant payment initiative, or that will be just something separate?
So if I may start, I think that we actually witness a perfect storm in payments, especially European payments, when we have a couple of factors which will definitely change the landscape, but I wouldn't dare to guess how it will like in 10 years, because there are so many factors. One is definitely technology and changing customer behaviors, and here stablecoins and crypto generally. It's visible that it is a big trend and actually could move, the market could move into that direction, and we are preparing ourselves for that. But we have also the European payment sovereignty agenda, where we see a lot of initiatives on two layers. First is interoperability of existing solutions, but we have also the players, including BLIK, with the pan-European ambitions. We have also the Digital Euro project. We have a lot of legislation. So definitely stablecoins are part of those changes. For me, it is difficult to guess how fast they will actually grow, but they can change the market significantly. I fully agree.
Okay, very interesting. Jiří?
From my perspective, totally agree with you. Digital euro is coming, Visa is tokenized, and where I see this place for stable coins is for local currencies and that kind of international payments with FXs that could be faster. And especially you can see startups in South America when the inflation is really high. There is also place for stablecoins. So yeah, there will be place. They are not killing currencies, but they will stay on the side.
They are creating some new value for the people.
Yeah, that's the new opportunity, how to use them, and MiCA is legalizing them.
Exactly. Rudolf?
For me, what would be interesting to see is what the programmable money is bringing, right? Because it can shake like how we perceive trust. Because now we trust in the institutions that they are secure, they have good fraud measures and everything, but when we start trusting the technology more, like, do we still need the institutions, or to what extent, right? So that's a little bit anarchistic, but...
So we are going not for the MiCA compliant, but rather for the Bitcoin direction, in your opinion, maybe soon.
Not sure if Bitcoin, but CBDC, like I have a limited understanding of it, but I understand that it should be also programmable, right? So there should be like something like some conditions or something like smart contract from Ethereum that you can use. And in this way, you trust the contract, right? You don't have to trust the institution. So
the institution.
Yeah, so let's see.
So we are deleting the intermediaries from the sector.
Yeah, when you mentioned MiCA, actually one thing that came to my mind is I have been talking to several companies by the past several weeks that are actually applying for MiCA regulation. And one thing they are basically all telling me, and I'm not expert on regulation, is that basically the requirements that are put on them are sort of kind of similar to what payment institution needs to have in place.
Exactly.
So what I'm sort of like personally feeling as a trend is those that will actually basically make it and be successful, they might actually basically in time get like a payment institution or e-money license, and basically this blend of the like what we now see as crypto and traditional finance is just blend into finance, and we will not basically look at I'm paying with this or that. I'm just basically doing what I need to do, be it send money overseas or pay for the product, and which way it is. That's for me as a customer at the end doesn't make sense, or like it's not that important. Important is that it's convenient, and whether it is this way or that way, that's secondary.
The technology is secondary. Yeah, Gabriel.
I pretty much agree with everything that's been said, and I just want to underline this idea that also Rudolf and Michał mentioned, that I similarly see big potential in the crypto space, stablecoins. I mean, I'm a hodler myself. But still, I think the near future is, for example, if we took a look at cards, I think both Visa and MasterCard are very open to this idea of having so-called crypto cards or providing cards to the crypto companies. So I think for a regular consumer, you know, who is not understanding the technology much, and they see the logo there, so exactly what Rudolf said, they trust the institution, they understand what is, Visa and MasterCard. So I think it will work like this in kind of blended mode for a while, I think. Maybe next decade even more.
So the name builds the credibility, and we will see whether the technology will work on the mass scale that we have. Guys, the last question to everybody of you, and we will have to finish. What do you think in the payment sector? What trends, what innovation will be boosting in the next 1, maybe 2, maybe 5 years? Briefly, from your personal perspective, maybe we'll start from Filip.
Yeah, very shortly, and we repeated it a few times, stablecoins and cross-border payments. I think this is something that will disrupt the market.
I will say something different. I already mentioned it a couple of weeks ago at one panel discussion. So I think when the biometric payments comes and the ease of payments will be at the highest level possible, I think we as parents need to focus on educating our kids on financial literacy and not overspending, because it will be that easy. So I think focusing on parenting, it will be super important in order to prevent fraud and unwanted expenditures from your credit card or whatever that will be in the future.
For me, I have two smaller trends. One is how insurance companies will become the back ends, basically, and the trend of like micro insurance, where it's triggered by the payment. So you pay for your flight ticket, and you get upsold insurance on back of that payment. And I forgot the second one, so I just go with this one.
Okay, great.
From my perspective, we have been talking about AI, but not about the quantum, and the quantum is going to change the market also. So one point is the security. We will be more interested, like customers, in security in future, and the openness. Instant payments, everything will be instant, but the data should be open.
Okay, Michał?
I will be not original with stablecoins, but in case of the Polish BLIK, I also very much believe in recurrent payments, which are the new product of BLIK with a huge potential.
Okay, Michał?
Yeah, I would echo Michał with variable recurring payments and automation of both like consumers and business spending based on like the different PFM or treasury management tools. And like from a Polish perspective, when FIDA comes live, then probably large insurers will go to banking space and large banks will go into insurance space, and it will be a very funny time.
Definitely, it will be a funny time, especially that the EU is doing everything to make us fun. For example, for me as a lawyer, so definitely we'll have really interesting times in the near future. Thank you very much for today. I think that, of course, we could deliberate for much longer about these topics. Unfortunately, we didn't have too much time for that. Thank you very much, and applause for my guests. Thank you very much.